Hey traders, welcome back to this week's weekly Forex forecast. The US dollar is the number one currency to the upside going into next week, but I want to show you in today's video is we are overbought on a rolling daily basis. We should expect the US dollar over the next 5 days or so to pause or correct. And if we drop down into the actual chart, you can see that the upper bound this week for the dollar is at the 107.81. And we have this major high sitting right here. And this, in fact, will be a major significant breakout for the US dollar. However, when you have a market which is running overbought on a rolling daily basis, what this means is that we're essentially starting to run out of steam. And although this can push a bit higher, one thing I want you guys to pay attention to is if we do trade into the 107.35 early next week, I would imagine that is going to put a lid on the dollar in the near term, at least for a consolidation underneath this. And then I think we're going to break through with momentum, probably in subsequent weeks or even in the first quarter of next year. So going into next week, I do like US dollar pairs as one of the top themes. But what I'd like to see first is rather than taking out the key area of resistance to the 107.35, and if it does that first, I would anticipate a pullback and a correction. If we get the pullback and the correction first, then below the 105.56, this is where it's going to set up a nice bull flag opportunity into the 107.35, because either way, the 107.35 looks a very high probability target for the dollar, if not next week, in future weeks. Okay, so if we have a look at the scores for the coming week for our portfolio selection, something very interesting we need to pay attention to this week is that both the dollar and the Japanese yen now are the top 1 and 2 currencies in the hedge dash performance metrics. This is significant. It's a significant quantitative signal. Why? Because usually when the dollar's going up, we're seeing flows come out of the yen, and when the yen is going up, we see flows coming out of the dollar. When we start to see money going into the dollar and the Japanese yen, this is usually a sign of risk off. Now, in equities, we did see that sell off, and I do think probably on balance, as we'll see in tomorrow's weekly stocks forecast video, I do think we probably have at least one more leg up in equities. However, the Forex market, which tends to lead equities, is starting to flash warning signs overall for risk off. Why? Again, because the two most risk-off currencies here, the US dollar and the Japanese yen, are now projected to start to move higher. And what this means is, at least now, and of course this is updated and changed every day, but what it means is now we should be focused on potential risk-off coming into markets over the next few weeks and perhaps into Q1, because again, as I said before, the Forex market tends to be leading, as is bond yields, for equities. So coming into this week, the top 2 currencies to the long side, those long themes are pretty straightforward. I like US dollar longs and I like Japanese yen longs this week. And you can see after that, pretty much everything else is kind of weak. I mean, we don't really have anything that stands out like the US dollar and the Japanese yen. So the third currency, you can kind of take your pick, from any of these. I'm going to personally be going primarily with the Swiss franc. Why? Because it's also a risk-off currency. So if the US dollar and the Japanese yen are kind of warning of potential risk-off coming into Forex markets and then subsequently into equities, I would want to pick the third currency here just to err on the side of caution to be that other kind of risk-off currency, even though it's actually neutral overall right now. So when we're looking to the downside here, the bottom currency is pretty obvious. It is the euro. So primarily, we're going to be looking in today's video, and I'm going to be looking at next week, euro dollar shorts, euro yen shorts, and also euro franc to the downside. After that, we'll also just take the bottom 3 in this case, which is the Canadian dollar. So we'll also be looking at US dollar CAD to the upside. Again, we're seeing crude oil continue lower, so that is going to weigh on the Canadian dollar. And we're also going to be looking at CAD yen to the downside, CAD franc to the downside. And finally, we're going to look in today's video at New Zealand dollar to the downside. We're going to look at New Zealand yen, and also we're going to look at New Zealand franc to the downside. And because I like the dollar pairs going into next week, and I know quite a few of you like pound dollar, we'll also cover as a bonus pound dollar to the downside in today's video. Okay, so kicking off the watch list, as we always do with crude oil, I can only be short crude oil going into this week. I cannot buy crude oil. You can see this week's probable range is between 70.13 and 63.76. What this means is you only really have a 3 out of 10 chance or a 30% chance of significantly finishing the week outside of these areas. So what I'd like to see is, I would like to see crude oil pull back, breach, start to trade above the 70.13, and that's where I'll be dropping down. This is exactly what we look at in the real-time setups with members throughout the week. Dropping down, looking for a lack of momentum. So going to the 1 hour, going to the 15 minutes, going to the 5 minutes, assessing the breakouts and the momentums, what's failing. And then once we get those setups above the 70.13, I'm going to be looking for a 1 or 2 day reversal to the downside. And the setups are very straightforward things. You know, we're talking about double tops, we're talking about heads and shoulders, we're not talking about reinventing the wheel or anything super complex. It's looking for momentum to fade and for buyers to start to stall out above the 70.13, because when they do and they exit their positions, you get that liquidity in the other direction. It just sells off, and that's where you can pick up your 1 or 2 day reversal out of 5 during the week. So if it blasts through here, and again, you know, only a 30% chance it would do this, but if it does do that and takes out the 73.32, this is the second place above this level. I would be looking for a 1 or 2 day reversal to the downside, whether I'm short from here already or not. If I am already short and this is a losing position, this is where I'd be looking to cost average it for a pullback and try and scratch this for break even. And the third thing you can always look for is if we start to correct back towards the upper bound and instead, you know, the moving average tracks it, and then you get the break back down below with momentum. And usually you only get, you know, 1 of these during the week, sometimes 2. But in the 4 hours, you tend to get 1 of these, it pulls back, and then you get that bear flag, in this case, down to the 63.76. But I cannot buy crude oil. I can only look for short opportunities in crude oil next week. Kicking off the Forex universe then with my favorite pair going into next week, it is euro-dollar to the downside. I would like to see this come up and take out the upper bound of its probable range at the 1.0720, because we become overbought during the week when we do that. This is where I'll be dropping down, looking for those reversal patterns, and I'll be looking for a 1 or 2 day reversal to the downside. If we blast through here, and it's not expected, but it's a backup plan really, but if we do blast through here and we take out the 1.090, this is where we become extremely overbought intra-week, and the odds of us reversing increase even more. So this is the second place. Whether I'm short already or not, I would be looking for a 1 or 2 day reversal to the downside in euro-dollar. And often when it takes this out, I'm already short and I'm just risk managing it. But sometimes I'm not involved, and this represents a fantastic initial opportunity because the odds of reversing from above here are much higher. And the third thing, as always, is you can look for this to start to pull back, and instead of getting to the upper bound, you know, you see it testing its moving average, and then you get the momentum break in the other direction, similar to this. Pulls back, nestles into the moving average, and that sets up your bear flag opportunity, of which in the 4 hours usually you only get 1 per week, and that would be the opportunity down to the 1.0361. Because this is the lower bound of the probable range, any moves below this represent a good opportunity to book profits on intra-week shorts. Next is US dollar CAD. I can only be a buyer or do nothing. Shorting this is not an option for me next week. We have the probable range at the 1.3929 to the 1.42510. And look at this breakout. You can see we've got this consolidation. It actually kind of pennants, or it kind of just contracts. Then we get the breakout, and look how nice this overall move is to the upside. So what I would like to see personally next week, especially as the DXY is pretty overbought. We looked at that on a rolling daily basis, especially if it takes out the Kiev resistance and then pulls back. If we start to see the US dollar CAD pulling back, breaching the 1.3929, this is where we turn oversold during the week. This is where I'll be dropping down and looking for those reversal patterns for a 1 or 2 day reversal to the upside. If we blast through there, and usually you need some kind of catalyst in order to get to these second upper and lower bounds, which is why very often if that happens, you can just kind of sidestep them, right? You know, if you've got a news event, just don't trade going into it, wait for it to take place, and then you can look at it afterwards. But if we do, for whatever reason, blast down to the 1.37680, this is where we become extremely oversold intra-week, and it's the second place I'll be looking for a 1 or 2 day reversal, whether I'm long already or not. And the third thing is, you know, look for it to break back down below its moving average, and then if you get the momentum back in the direction that we're looking at here, the overall direction is to the upside. In this case, you can look for that 4 hour bull flag setup, pulls back into the moving average, and the profit taking target to the upside is the 1.4251. Next is New Zealand dollar. I can either be short or do nothing. Buying this is not an option for me next week. What I'd like to see is, again, we're kind of overbought on a rolling daily basis in the dollar. So I wouldn't be surprised to see this kind of pull back and actually test the upper bound next week. In fact, that would be fantastic. Takes out the 0.5960, and then I'm going to start to look for those reversal patterns to the downside for a 1 or 2 day liquidation. If we blast through here, again, unexpected, but if it happens as a backup plan, whether I'm short here or not, the 0.6055 is where we become extremely overbought intra-week. I'd be looking for a 1 or 2 day reversal from there as well. And the third thing is, if we start to get this kind of correction, back above the moving average, and instead of taking out the upper bound, we reverse during the week, and it should be clear. It shouldn't be chopping around the moving average. You should see clear momentum. It should be almost indisputable that you've got momentum to the downside, and then it tucks back into the moving average, looking for that bear flag opportunity down to the 0.5770. And the final pair we're going to look at here before moving on to the next theme, which is the Japanese yen long theme, is pound dollar. I'd like to see this pull back, breaching the upper bound of its probable range, which sits at the 1.2849. What I like about this is look at the prior lows here of this kind of consolidation. One here, one here. So if we breach this, not only do we take out the 1.2849 turning overbought intra-week, the odds of a 1 or 2 day reversal to the downside sit at around 7 out of 10. But if we do that, we're also trading into a prior broken support turning resistance. So I really like this opportunity next week. We breach the upper bound. I will be looking for a potential short. If we blast through here, as unexpected as it is, if we take out the 1.30790, this is where we would become extremely overbought intra-week. And usually, if I'm looking to be short, I can pretty much only pull the trigger usually twice. Once above this level, and then I can't re-short it unless we take out this level. Then I've got a second bullet that I can fire from the chamber once we turn extremely overbought. So that's what I'm going to be looking for next week. Again, if we start to correct, and maybe we get very close, but we don't test the underside of this, and instead you start to see momentum breaking back down below the moving average, and you get this kind of bear flag tucks back into it, and you get that initial test of the moving average. Look for that down to, in this case, the 1.2390. Okay, so moving on to my second favorite theme next week after US dollar long opportunities, it is Japanese yen long opportunities. Starting, of course, with euro yen to the downside, because the euro is my favorite short theme heading into next week. You see this big momentum to the downside, so I would not be surprised. I think the dollar pairs need to pull back and test their upper lower bounds, but I think the yen pairs could go intra-week. So what I'll be looking for, personally speaking, next week, I would ideally like to see this come back, retest this high, test the underside of this breakout, and at the same time, we breach the 1.6512. Then we turn overbought intra-week as well. We're going to be testing a key area of resistance. We'll be testing the underside of support. This is going to be a fantastic place to start to look for momentum to fade, double tops, head and shoulders, looking for a 1 or 2 day liquidation. And in fact, if we do that, there's a good chance that we could continue down over the next few weeks. But I'm looking primarily for short-term opportunities each week. Capture 1 or 2 days out of 5. Again, that's really the goal, the objective that I'm personally doing and we're doing with members every day during the week. So if we pull back and test that, that is going to be a great opportunity. The second thing is if we blast through here and take out the 167.56, we turn extremely overbought intra-week. Now, if that happens, this would actually be a continuation of the overall trend, and that would be significant. I don't expect it to happen, but if it does, whether I'm short or not, reactively, it's the second place I'd be looking for a 1 or 2 day reversal next week. And the third and final thing, because you can see we've already pulled back above the moving average and now we've sold off. So you can look for this to pull back, test the moving average. The moving average isn't going to come out like this, but look for the moving average to pull back. And you can look for that potential bear flag opportunity intra-week down to, in this case, the lower bound at the 160.23. Great profit taking opportunity to the downside next week in euro yen below that lower bound. Next is CAD yen. I can either be short or do nothing next week. I cannot buy this. Look at the momentum. Again, I always prefer to see this turning overbought or oversold intra-week. In this case, we'd have to retest the 111.35, or rather retest the prior high and breach the 111.35. if we do that, this is going to be a place I'm going to be looking for momentum to fade. I'm going to start to look for reversal patterns above this level, and I'm going to be looking for a 1 or 2 day liquidation to the downside. If we blast through there and take out the 113.14, this is where we turn extremely overbought intra-week. It's the second place I would consider looking for a short opportunity, whether I'm short already or not. But again, very much like the market we just looked at, if we've already broken down with momentum, and you can see this is lacking momentum, we take out the high, we fade. Take out the high, we fade. So again, if we take out the high this week, I'll be looking for the same type of sell-off, But because we've started to break the momentum, we're already back below the moving average quite cleanly. You could look for that bear flag opportunity intra-week already as it comes back, tucks into the moving average, and you can look for the next leg down to the 107.75. And my third favorite yen pair next week is New Zealand yen. Again, I can either be short or do nothing. What's interesting here is I already see a kind of head and shoulders which is broken with momentum. Look at this. You see this? There's your right shoulder. Here is the left shoulder. Here's your head. Now, if we can get back above, if we can fail, the breakout, and we can pull all the way back and take out the prior high above the 92.34, I will be looking for a 1 or 2 day reversal from above this level. Again, very much like we take out prior highs and then we liquidate, I'll be looking for that opportunity next week. If we blast through here, I don't think it's going to happen, but if we do and take out the 94.10, in fact, roughly we have only a 5% chance of it happening based on the prevailing market probabilities. That would be the second place above 94.10 that I'd be looking for a short opportunity, whether I'm short already or not. And again, let me just take away the drawings so I can show you the head and shoulders breakout we already have, because I would not be surprised to see this kind of tracking back down. Maybe it continues at the start of the week, comes back into the moving average, and that's what gives us the kind of bear flag intra-week opportunity, in this case down to the 88.81. Either way, I can either be short or do nothing. Cannot buy New Zealand yen next week. Okay, so wrapping up then with the franc pairs. Now, I do primarily like the dollar long theme and the Japanese yen long theme. However, I'm also going to keep on my watch list the franc pairs as that other risk off currency. Now, I've zoomed out a little bit here again because when I zoom in, it looks like these ranges are huge, but this is just a reflection of the fact that recently we've been consolidating and lacked volatility in the franc pairs. So going into this week, I do favor shorts only in Euro franc, and I'm going to be looking for Euro franc to trade above the 0.9442, which is the upper bound of its probable range next week. If we take this out and we start to attempt to break above this high, I'm going to start to look for momentum to fade, look for those reversal patterns, and I'm going to look for a 1 or 2 day liquidation to the downside. If we blast through here, as unexpected as it is, and take out the 0.95226, this is the second place, whether I'm short from above here already or not, I would be looking for a potential 1 or 2 day liquidation. And the third thing, of course, is you can look for that kind of pullback towards the upper bound, look for the break back below the moving average with momentum. And if you get that, that sets up that kind of bear flag opportunity where it hugs back in and you get the short opportunity down to the 0.9280. Next is CAD franc. Again, these ranges look huge, but they're not. These are the probable ranges specifically for next week. The Canadian dollar can easily go to these. It can even get to the 0.64370, but it's unexpected. What I'd like to see is I'd like to see this push higher. I'd like to see this take out the 0.6370. If we do that, we start to turn overbought intra-week. You can see it kind of trending, and then I'm going to be dropping down, looking for momentum to fade. You can look for those head and shoulders on the 1 hours, the 15 minute, the 5 minute for timing, and look for those, double tops. Look for that reversal pattern. Once you get the buyers pulling out their positions, that's where you get that liquidation, usually 1 or 2 days. If we blast through here for whatever reason, unexpected as it is, above the 0.64370, we become extremely overbought intra-week or during the week. So that means that's the second place. I get another round in the chamber that I can pull. I can fire a second bullet here to look for a cost average, if I'm down on my initial position. If I'm not already involved, great, second opportunity, even better from above here than down here. And the third thing is look for this to pull back. Perhaps we pull back, test this high and we start to double top. And over here, we break back down, breach the low. That would actually confirm a double top pattern in the 4 hours. And then you can look for that pullback, bear flag into the moving average and down to, in this case, 0.6236. And the final Forex pair we're going to look at before moving on to gold and silver is New Zealand franc. Again, I would like to see this pull back. I would like to see this take out, in this case, a 0.5286. Once we do that, the odds of us going much further start to diminish, drop to about 30%. So I'd be looking then for those reversal patterns for a 1 or 2 day liquidation. If we blast through there, take out the 0.53620, and probably what would be great, if that did happen and we took out this high as well. So not only do we become extremely overbought, but we trade into a key area of resistance. This would be a very good place to start to look for a 1 or 2 day reversal, whether I'm short already or not. That's what I'm going to be looking for. And the third and final thing is you can look for it to come back again. Maybe it fails at this high, intra-week, right? And this starts to turn up. You get the reversal back down below. The moving average follows it. And then you get that bear flag set up in the 4 hours. In this case, down to the profit taking target of 0.5134. Wrapping up the video then with gold and silver. Now, I've been a buyer really of gold and silver for quite a while, but the dollar rally is now finally starting to break the back of the gold and silver rallies. So what I'd like to see going into next week, I can either be short or do nothing. Buying this is not an option for me now. I'd like to see this pull back, and I'd like to see it trade above the 262534. If we do that, we turn overbought during the week. That is where I'm going to be, especially if we break through there and test this low. That is where I'm going to be looking for momentum to fade. I'm going to start to look for reversal patterns to the downside above this level. And I'll be looking for a 1 or 2 day liquidation. If we blast straight through and take out the 268761, again, I do not expect this to happen. It's very unlikely. But if we do, for whatever reason, that would be the second place I'd be looking for a 1 or 2 day reversal to the downside, whether I'm short already from above this level or not. And the third and final thing is you can look for that kind of bear flag setup where we pull back, and instead of taking out the upper bound, you get momentum once again below the moving average. It tucks into it, and then you can look for that bear flag setup. In this case, the profit taking target to the downside for next week is the 2500.79. And last but not least, we have silver. Now, going into next week, just remember the dollar is on a rolling daily basis overbought, and if it tests that key area of resistance, that key breakout point, especially being overbought on a rolling daily basis, it's probably going to need to pause and correct. So I would not be surprised at all to see silver, gold, and all of the dollar pairs testing their upper and lower bounds next week. And if we do breach it at the 31.78, especially if we breach it and take out this high, and we have a nice low here as well, so a nice kind of area of highs and lows over here. If we break through here, let's say we're trending and we've still got momentum, and then we trade into here and we test this low, and then we start to fade, that's where you can really look for a 1 or 2 day reversal to the downside. Look for your head and shoulders, your double tops. If we blast straight through, for whatever reason, as unexpected as it is, and we test the underside of this and breach the 3330, this is the second place I'll be looking for a 1 or 2 day liquidation, whether I'm short from above here already or not. And the third thing, as always, if we start to make our way back up there, and then instead of taking out the upper bound, you get the failure, breaks back down below it. You see the moving average turn, and then you get the pullback, breaks back down below it. You see it tuck into the moving average, and that sets up your bear flag opportunity intra-week. In this case, in silver, down to the 28.72. Any moves below there is representative of a great profit-taking opportunity for shorts next week in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.